So if you're transitioning into starting your own business, you probably went through the process of creating an LLC, but no one ever teaches you how to actually pay yourself through your LLC. In 2023, my partners and I opened up our own physical therapy practice here on the Upper West Side. We spent a bunch of time researching this stuff, so in this video, I'm gonna teach you exactly how to pay yourself as a solo LLC. That way you'll be one step closer towards growing your business and becoming profitable. So first, let's talk about some of the details of the LLC structure. If you're a single member LLC, your business is likely treated as a pass-through entity when it comes to taxes. This just means that the profits from your business pass through to you personally and you pay taxes on it as part of your individual income. So there's no fancy corporate filings here, just your personal tax return. Understanding the idea of what a pass-through entity is and all the tax implications that come along with that is gonna help you figure out how to pay yourself without accidentally blending your business and your personal finances, because that's one thing that the IRS really hates. And trust me, you don't want to come up on their radar. One of the simplest ways to keep your finances clean and optimized is to open up a business bank account. Opening your first business bank account is really a game changer because it's the first step towards really separating your personal finances and your business finances. Not only does it help from a bookkeeping perspective, it also just makes sure that you don't accidentally dip into your business funds. I actually made a whole video on opening up your first business bank account, so you can check that out if you want more details on that. So we covered the tax considerations and the business bank account. Now let's talk about how to actually get money into your pocket. As a single member LLC, you have two options for paying yourself. One, you can take an owner's draw, and two, you can pay yourself a salary. An owner's draw means you're directly pulling profits from the business whenever you need it. The owner's draw option is pretty flexible as far as how much money you can take out each time and when you can take money out. A salary, on the other hand, is a consistent paycheck that you give yourself on a regular schedule. A lot of people prefer this option because it provides structure. Every week, every other week, whatever frequency you decide, you know exactly how much income is coming in, and that just allows you to plan better for future expenses or even future personal expenses. Neither is right or wrong, it just depends on what your personal preference is. Now let's figure out exactly how much you should be paying yourself, and figuring this out is a two-step process. Step one, you're gonna look at your business's profitability. Profitability refers to how much your business is earning after you cover your expenses like rent, utilities, and supplies. This is also referred to as your profit margin. Once you know your profit margin, step two is figuring out what reasonable compensation is. Reasonable compensation is a wage or salary that's equivalent to the industry standards as recognized by the IRS. So basically, reasonable compensation is if you were to take a comparable business in your industry and see what they're paying someone to do the services that you do for your business. I know reasonable compensation is a pretty vague term, especially when it comes to how the IRS recognizes what a reasonable compensation is in your industry. So basically, I would look at reasonable compensation like this. Take a business that's comparable to yours. How much are they paying someone to do the service that you provide within your business? So take our physical therapy business, for example. Not only am I a co-owner, I'm also a physical therapist within the business. And so when it comes to determining what my reasonable compensation should be, we're gonna look at other physical therapy businesses in our market, which is New York City. How much are they paying therapists with my level of experience? And also, what settings are they in? Outpatient physical therapists get paid differently than inpatient physical therapists. So evaluate your business, see what other comparable businesses in your market are paying people with your level of experience. And honestly, don't overthink this. I feel like we overthought it when we were first starting out. We didn't want the IRS to come after us. Just make sure it's nothing crazy. Like if the reasonable compensation in your field is 85K, don't pay yourself 150K, be reasonable with what your salary is gonna be. So obviously reasonable compensation is context dependent. So a lot of it's gonna be based on your location, your practice setting, your industry, and how many years of experience you have. So technically, as a single member LLC, paying yourself a reasonable compensation isn't required. I just recommend it because in the future, if you ever change your business entity, some of them actually do require you to pay yourself a salary that is within the reasonable compensation range. And we'll talk about this more in the future, but let's say in the future you decide to switch to an S Corp. S Corps actually require you to pay yourself a salary that is within that reasonable compensation range. And so I just recommend getting used to it now. Understanding your profit margin and reasonable compensation for someone in your position is really gonna help you decide how much money you should be taking home as income while still leaving enough for you to reinvest into your business. And of course, we can't talk about paying yourself without talking about tax considerations because the IRS needs to get their bag too. As always, you're gonna be responsible for federal income taxes and state income taxes. And obviously that's gonna vary depending on where you live. As a single member LLC, however, you're also gonna be responsible for self-employment taxes. So basically self-employment taxes are the employer and the employee portions of Medicare and Social Security. And if you're a W-2 employee, you know that in your paycheck, a little bit gets taken out for Medicare and a little bit gets taken out for Social Security. And so as a single member LLC, this is no different. You still have to contribute. At the time of recording this, self-employment taxes are 15.3%. You will also be responsible for any other state or local government taxes. For example, I live in Manhattan, and because of this, I have to pay an additional New York City tax on top of all those other taxes. Don't ask me where the tax money goes. Don't get me started. Type this prompt into Google to find out if your state or city has any specific tax considerations. So between federal income taxes, state income taxes, self-employment taxes, and any other local taxes you might have, I personally recommend setting aside 30 to 40% of your income for paying these taxes. Personally, I set aside 40% of my income for taxes just because I don't want to get hit with any unexpected tax bills or have to stress about not being able to pay for taxes when the time comes. I know 40% sounds high, and it definitely is. Just don't forget that you can decrease your taxable income by using tax deductions. So things like business-related travel, office supplies, these are all deductions that can help decrease your taxable income. I'm gonna go over tax deductions a lot more in future videos to help decrease your taxable income and just maximize how much money actually goes into your pocket. So no matter what your payment preference is for your single member LLC, whether it's an owner's draw or a salary or some sort of combination of both, I highly recommend paying yourself on a consistent schedule. Pick a schedule that works for you, whether it's every other week or once a month or every week. As long as it's consistent, it's really gonna help with your bookkeeping and for your planning. Trust me, having a consistent payment schedule is gonna make your life a lot less stressful because you'll know pretty much exactly how much money you're gonna have coming in. And also it just makes planning for the future a lot easier. And I know this video is about paying yourself, but I can't help but mention the importance of reinvesting into your business. So as tempting as it might be to take home every penny of profit, reinvesting into your business is really what's gonna help set you up for long-term growth. Whether it's upgrading equipment or investing in part-time staff or boosting your marketing efforts, all of this is gonna be worth it in the long run because then it'll help grow your business to a point where then you can pay yourself more. Another thing I wanna emphasize is keeping an eye on your progress. So most business books and stuff recommend you reviewing your progress every quarter. I personally recommend reviewing it every month, especially when you're first starting out. There's so much volatility and so many things that are constantly changing. You really wanna keep track of what's working and what's not. This is gonna make sure that your business is steadily growing, you're cutting out any inefficiencies, and that way it'll help you sustain this payment structure that you just came up with. And obviously the things that aren't working are inefficiencies that you wanna cut out, and then you really wanna double down on the things that are working. And if you keep doing this over the long term, your business is gonna scale, your profit margin is gonna increase, and then you'll be able to pay yourself more. Now that you know how to pay yourself through your single member LLC, your next step might be protecting your business with general liability insurance, which I talk a lot about in this video.